Good morning and thanks so much for tuning in. You're watching Trade Talk on BQ Prime. My name is Mathew and with me is Hiral Dadia. Morning, Hiral.
Good morning, Alex.
Well, the texture of the global market certainly looks more positive than it has in the recent past, with the US markets closing strong on Friday and the Asia markets this morning looking strong as well.
Absolutely. If you see in terms of KOSPI as well, on the back of the short selling ban,
Yes.
that index is up nearly 4%. And similarly, that's getting translated to Indian markets as well, the kind of positivity that we're seeing, because SGX Nifty is indicating a positive start.
Nifty.
Absolutely. GIFT Nifty is indicating a positive start. And overall, if you see in terms of the texture of the markets, buy on, dips and sell on rally. That's the kind of funda that we have been witnessing. Last week, that formation at the bottom, was absolutely firm. Now, whether this uptick will continue is what we need to see, because clearly cues that we are picking up so far are indicating that yes, there is a possibility that the pullback that we saw last week will continue in today's session, provided we maintain certain levels in terms of Nifty as well as Bank Nifty.
19,200 is the level we closed above for the Nifty 50 on Friday, and it has been a bit of a choppy week. The Sensex also ends high, of course. We halted a 2-week losing streak last week as well, and that just shows what kind of slip we saw from the high point of about 20,000 in a very short period of time. We've recouped quite a bit of ground as well. So at this juncture, about 800 points, does that look likely before Diwali, Hiral?
Now, that's a question probably Agam will be able to tell us as well what the F&O data indicates. But very quickly, you have real estate, which has continued to outperform. So that's going to be a sector we will continue to wait and watch. And overall, if you see from a stock-specific perspective as well, and the broader markets, you have ended in the positive. You have the mid-cap index, which saw gains of around 0.7%, small cap, a 1.2% up move. And this is in spite the FIs being sellers, net sellers in October. If I'm not mistaken, in the month of November, little over 3,000 odd crores is what they've already sold. So it's mainly a DII-led pullback that we are seeing in the markets. Let's head across to Agam and see what the F&O data is indicating. Agam, a couple of things that we just pointed out. One, a pullback rally that's coming in. Two, we are seeing buying at lower levels. So buy on dips, sell on rally is the kind of strategy that we've been seeing. And it's the DIIs which are supporting, whereas the FIs have continued their exit with almost little over 3,000 odd crores.
Right. So, Hiral, as far as FI positioning in the index futures is concerned, last Friday, or rather last Thursday, it was at 13% longs. That's moved up to around 17% longs. We are seeing substantial amount of short covering. In fact, we saw the highest close in the last 8 sessions as far as the Nifty is concerned. Clearly indicated by what we've seen in the index futures, considering we have seen a decline in open interest across the Nifty as well as the Bank Nifty or futures, even as the indices move higher, which clearly shows that a lot of shorts were covered. Are all the shorts out of the system? Absolutely not. There are still a considerable amount of quantities out there where there is more pressure towards the downside. But for now, of course, we clearly see a base formation around the 18,900, 19,000 mark. In terms of the options market, we're watching out for 19,200, 19,300 levels. That's where we're seeing a lot of concentration in terms of open interest. And coming down to the Bank Nifty, we're actually watching out for 44,000 on the higher end, even though at the moment, in the very immediate term, we're keeping an eye on 43,500, considering we've taken that out. And that should be an important level to keep an eye on today's juncture.
Certainly, and in the context of State Bank of India and the reaction to its results as well, perhaps that's going to factor. Agam, thanks so much for joining in. Let's talk about State Bank of India results, right? You saw the PAT number grow by as much as 8%, and in fact, the margins did contract just a tad bit. They came in at 3.43%, the NIM. But I guess the larger talking point will be the comment on the corporate loan book and how that's expected to fuel growth for the bank going forward.
If you talk about it, the unsecured loan book, that's a key thing that the banking company, the banks are talking about as well right now.
Absolutely. Let's first listen in to what Dinesh Khara, the chairman of SBI, had to say after the results, and then we'll go across to Pragati to get you some more details on the results itself.
There's a lot of talk about unsecured credit once again, and it primarily stems from the RBI governor mentioning it during the policy speech. Any concerns at all on your book or overall in the economy as well?
I think as far as we are concerned, our unsecured book I've mentioned in the past, and I will maintain my stand. Our unsecured book is actually better than the secured.
Okay.
If we really look at it, our gross NPA in the unsecured book is just about 0.69%. And when we look at the kind of the entities or the customers whom we are offering the unsecured book, is almost about 84% are the one who are either government employees or in fact, I would say that 94% are the one which are either government employees, para-government, or paramilitary, or state government, or public sector entities. That is the kind of a composition which is there, and they are maintaining their salary accounts with us.
So that was Dinesh Khara clearly giving out his view with regards to where the unsecured book goes. But let's head across to Pragati and understand what the brokerages are making out of it and whether the numbers that SBI has given out will help an upside in terms of Bank Nifty or not. Pragati, good morning. What are brokerages making out of the earnings and what is your view?
Yeah, hi, good morning. So naturally, we had a very packed Saturday with SBI largely reporting an inline set of numbers. As you rightly mentioned in the morning, the net profit was up, the NII was up, and even the other income were up. And the asset quality also improved with gross NPAs and the net NPA ratio going down on a quarterly basis. Now, in terms of what the brokerages are making out of it, there will be three things to watch out for in the SBI earnings. There's a slight compression in NIMs on a quarterly basis, and the bank has guided for the further 3 to 5 bips compression over the second half of FY24. Even though the profit was up 8% year on year, it was on account of lower provisions. The bank has said that it has increased its employee wage provisioning to about 14% from 10%. So that is another thing that everyone has been talking about. Third thing, as I said, that we have three things to watch out for will be the corporate portfolio, because it was something that overall the business growth was healthy, barring this particular segment. The bank has a proposal pipeline of approximately 4.8 trillion, and accordingly, it expects about 14% growth going ahead. Motilal Oswal has maintained a buy with a target price of 700, and even MK Global has maintained a buy with a target price of 700 here.
All right, so State Bank of India and the rest of the PSU banking pack as well is going to be a key watchable in trade today. But we've also got an update, Pragati, on Bank of Baroda. Beyond just the results, there's also the story of BoB World and how that is playing out. The termination of the contract of the digital lending business head, Akhil Handa, and his comments to you when you spoke to him. What can you tell us about that?
You're absolutely right, Alex. Well, the BoB World app news has been around for quite some time now. Before I give you a quick update on that, the Bank of Baroda's earnings were a mixed bag in general. The net profit was up, the NII was up, the other income was up, but there were a couple of things to watch out for, because the fresh slippages of the bank were up 76% quarter on quarter, and this was largely due to one large aviation account. And the lender is also moderating its growth in the unsecured loan book and will do a portfolio analysis for the same. It has revised its NIM guidance to about 3.15%. And after we got this entire review of the bank earnings, we got a news update from the CEO in the press briefing that the contract of Akhil Handa, who's the former CDO, was terminated by the bank with regards to the BoB World app case. Now, the interesting bit here is that when we spoke to Mr. Handa himself, BQ Prime seeked his comments, he has rejected any such claims and told BQ Prime that he stepped down in August itself and was serving the notice period. Well, after that, we don't have any latest updates, but yes, this is what we know so far.
Right. Thank you for getting us the details, Pragati. And clearly, with regards to Akhil Handa, that's going to be a crucial development overall as well. So let's see what it turns out to be going ahead. Moving on here, Vedanta, which reported numbers over the weekend, and clearly the net loss has come in at around 915 odd crores. A couple of comments that they've made as well with regards to where raising funds go. We have Rishi standing by to get us more. Rishi, how have the numbers stacked up, and will the additional loan that they're talking about help them get out of troubled waters?
So firstly, I'll talk about the numbers. So apart from profits, everything else looks like they beat estimates, really good numbers. but it reported a loss. So this is all on the surface because there are a lot of exceptional items that are actually driving those numbers. So firstly, if you look at its revenue, it was up by 6%, and this was on account of a 4,760 crore gain on a favorable oil block arbitration award that it won. So the government had actually contended one of the production sharing agreement with regards to Vedanta's Rajasthan oil block, and Vedanta eventually more or less won the case, and that's why there was an additional gain of 4,700 crores which got added to the revenues. So if we exclude that impact, the revenues must have actually declined, and this gain is what also boosted the 49% growth in EBITDA, and as well as 2.9x growth in the oil and gas EBITDA, because this comes under the oil and gas segment. Now, apart from this, operationally, the power and fuel costs fell by 28% to 5,800 odd crores, and so this is also a positive that drove the margins, and cost of materials consumed also remained flat. But if you look at the profit numbers, there was an exceptional gain on account of the arbitration award, again at about 1,180 crores. But despite all that, it still reported a loss, and this is because of an exceptional tax, because it is shifting to the newer tax regime, because of which there's about 6,000 crores of exceptional tax that was charged to its account. Now, apart from that, if you look at its segmental profits, as I said, oil and gas, the revenues almost tripled, but this was on account of the arbitration award. But then we have Zinc India or Hindustan Zinc, whose profits were down by about 30%, and this was on account of lower base metal prices globally. And with regards to its aluminium unit, the profits are actually up by about 2.8 times, and this is on account of lower cost, and the volumes also declined quite significantly during the quarter.
Thanks so much, Rishi, for bringing us those updates. A loss number in the context of all the dividends that have been paid out over the course of this financial year and last. We'll have to see how the analyst community and indeed the street and institutional investors react to something like this.
Absolutely.
So
this is going to be an interesting one.
Certainly. We've got a lot of earnings to track, and let's start, in fact, with the non-financial earnings. And we've got the likes of Interglobe Aviation as well as Thermax, India Glycols, a number of stocks to talk about. Saloni is joining in with some perspective on that. Let's start with Interglobe Aviation, Saloni. Morning.
Morning. So first we have Indigo. So the company posted a rise of almost 20% in its top line, and a profit of 189 crores as compared to a net loss last year, both beating analyst estimates. So the margins have significantly widened this quarter and stand at 16%. The revenue passenger kilometer has risen by 34% year on year and now stands at 29.4 billion. Next, we have Thermax. So the top line saw a 11% rise, while the bottom line saw a 46% rise, both beating analyst estimates again. This was mainly on the back of the increase in government capital expenditures on infrastructure and the focus on ethanol blending. Also, the government policies and capex outlays to support green technologies like biofuel will boost the clean energy portfolio of Thermax. Next, we have India Glycol. So the revenue saw a growth of 14% and the profit was up 61%. The potable spirits segment saw a 15% uptick, and the bio-based specialties and performance segment saw a 20% hike in revenue this quarter. Next, we have Godavari Power. While the revenue of the company was more or less flat, the profit was up over 50%. This was on the back of lower iron prices that led to a lower cost of materials consumed that fell by 13.5% this quarter. Next, we have Gujarat Fluorochemicals. So both the revenue and profits witnessed a degrowth. The revenue fell by 35%, while the profit fell by 85%. The revenue from the bulk chemical segment was down 38% as caustic soda prices were impacted further during this quarter. And the fluorochemical segment revenue fell 53%, and the fluoropolymer segment revenue fell 25%, mainly due to Chinese dumping that impacted both revenue and margins of both segments this quarter. Next, we have EIH. So the company's revenue rose over 30% and the profit rose by 4 times to around 98 crores. The margins rose from 21% to 27% this quarter. So then we have JK Cement. So the revenue was up 23% and the profits were up 61% at 178.5 crores. The growth was primarily driven by a volume boost of 22% in pre-election year with government boost to construction. So then we have Zomato. So the company posted an EBITDA of 47 crores due to higher costs, with delivery costs rising 13%. A deferred tax credit of 16 crores and lower finance and depreciation costs resulted in a profit of 36 crores. Then we have Crompton Greaves. So the revenue was up 4.9%, but the profits fell by 22%, with ECD and Butterfly segments profits declining by 3% and 50% respectively. And lastly, we have Delivery. So the company's revenue rose 0.6%, and it faced higher net loss of 103 crores compared to a loss of 89.5 crores sequentially in the previous quarter.
Right, so losses have narrowed for Delivery, so that's going to be in focus. And Zomato is worth a mention, though the numbers came post-market hours clearly because of the 10% up move that we saw in terms of the stock price on Friday. So let's see how that stock reacts. Thank you for getting us the details, Saloni. But apart from this, you have a Divi's Laboratories that will be reporting numbers today. It's going to be an absolutely interesting quarter, Alex, because if you see from a year-on-year basis, it looks slightly tepid because clearly the base was absolutely high on the back of one of the COVID drugs, that they actually manufactured. So overall, a 5.5% uptick in terms of revenue. Margins are expected to dip almost around, say, 250 to 300 basis points. And the profits are expected to decline by almost 10.5%. However, if you see from a sequential basis, the numbers are expected to remain strong. So it's going to be as to what the markets are looking out for, because the base effect of the COVID year probably will be priced in, and that's something that the markets could probably ignore as well. Overall, if you see from the key highlights, now the generics as well as the nutraceutical business, these two are the ones which are driving the revenue for the company. And if you see from with regards to where the Kakinada plant goes, that is progressing well. They're expected to incur a capex of around 1,500 odd crores at this plant. They have guided for a double-digit revenue growth and margins in that range of 30 to 35% in the near term. Now, whether they meet street estimates or not is what we need to wait and watch, because clearly pharma as a sector has seen a good run over the last couple of months. And if the numbers meet street estimates as well, there is a possibility you could just see some bit of a profit booking that could come in terms of a sectoral performance. So Divis is going to be in focus today.
All right, watch out for Divi's Laboratories. In fact, we've covered quite a bit of ground and talked about a number of sectors and stocks that are going to be in focus. Let's continue that trend, in fact. And we've got Mika joining in to tell you about the stocks that are in the news. Mika, morning. What are you picking up?
Good morning. So first we have Tata Steel. The company has set the record date for the scheme of amalgamation amongst Tata Steel and Tata Steel Long Products on November 17. The company will issue and allot equity shares in the ratio of 67 equity shares of ₹1 each for every 10 equity shares of ₹10 each that Tata Steel Long Product equity shareholders hold. Then we have Indian Oil Corp. The NCLT approved the 100% acquisition of Mercator Petroleum via the corporation insolvency resolution process. Mercator Petroleum possesses a block in the Cambay Basin in Gujarat, which the company highlighted, and the company will execute the resolution plan and fulfill all the required regulatory procedures going forward. Then we have JSW Infrastructure. The board approved the acquisition of Marine Oil Terminal Corp. along with the acquisition of Marine Oil's Fujairah branch, which is an operating liquid storage terminal with a capacity of 465,000 CBM, and the acquisition of JSW, and the acquisition will be done by JSW Terminal Middle East for enterprise value of $187 million. The board also approved the purchase of a container train operator license from CCAL Multimodal and Rail Transport. Then we have Elpro International. The company acquired 33,650 shares of HDFC Bank at an acquisition cost of 5.01 crores for investment purposes. Then we have Ethos. The board approved a 174.99 crore fundraise via a qualified investment placement, qualified institutional placement. The issue price for the QIP is set as rupees 1,547 per equity share, which is a 4.95% discount to the floor price of 1,627.49 per equity share. Then we have Infosys. The company and Spirit Aerosystems have inaugurated a dedicated center for aerospace engineering in Texas, and and it will basically help Spirit strategically expand to operate in the proximity of the manufacturing and MRO operations. Then we have Reeves Cotton. The company sold a land located in Pune to Rural Developers LLP for a sale consideration of 284 crores. Then we have Shanti Gears. The purchase agreement with Shrizi Metazine was terminated. This agreement was related with the purchase of a land and buildings in Gujarat for the expansion of the company's gear manufacturing servicing activities. The termination was on account of higher acquisition costs, and the company is now exploring options in the western part of India. Then we have Blue Jet Healthcare. There was a fire at their Mahat plant on November 3. Till date, the company reported 7 casualties, and they're cooperating with the state and local authorities to maintain the normalcy at the plant and are still in the process of evaluating the extent of the damage of the loss. Then we have Restaurant Brands Asia, where they executed a facility agreement with Axis Bank for availing a secured term loan facility of up to 150 crores. The company will basically be providing a security for issuance of a standby letter of credit by Axis Bank India in the favor of the lender for giving the term loan facility to be availed by BK Indonesia. And lastly, we have Signity Technologies. The managing director, CV Subramaniam, resigned with effect from November 3rd, and he cited personal reasons for the resignation.
All right. Thanks so much, Mika, for bringing us those updates. I'll add one more stock to the list. IEX is going to be in focus today. It's a stock, by the way, despite the fact that we're so used to talking about IEX in positive terms, in terms of stock movement, this year hasn't been the best. Year to date, they've lost close to 17-18% or thereabouts. 6 months, they've lost about 20%. And the last month itself, they lost about 4.5%. But the update is positive for the month of October. Electricity volume was up as much as 21% in the month of October. You had overall volume that stood at 18% higher. And more importantly, the average clearing price for the month,
that's the key highlight,
stood at 6.28 rupees per unit. And more importantly, beyond that also, the demand surge pushed the daily the day ahead moving market price up as much as 68% year on year in the month of October to an average of 6.45 rupees per unit. And that could, in fact, push the price
absolutely higher. And clearly, not only, that will push the prices higher because the kind of underperformance that we've seen from the stock,
yes,
a gap up opening on an IEX cannot be ruled out. So please keep your eyes absolutely open with regards to where IEX goes. So that's all the action, Alex, that we have in terms of the secondary markets. But the primary market is buzzing as well today. You have a Cello that will be listing today on the bourses, an IPO that will be opening as well. Himansh is, as always, standing by to get us more in terms of what he's tracking in the primary market. Good morning, Himansh.
Good morning, Hiral. So we'll start with Cello World, like you mentioned. The consumer houseware company will be listing today at the issue price of 648 a piece. The 1900 crore IPO, which was purely an offer for sale, which offered some dilution to the promoters and other selling shareholders, was subscribed almost 39 times, led by institutional investors and non-institutional investors, about 108 and 24 times each. Retail investors also showed substantial interest, subscribing over 3 times. And now, if I were to move on to the IPO offerings and the subscription updates, I'd start off with ESAF Small Finance Bank, where the IPO was subscribed 1.74 times on its first day. And the bids were led by institutional investors and retail investors. Retail investors close to 2 times subscription here. And the Microfinance Bank, which is based out of Kerala, is set to raise about 391 crores with fresh issue. Much of it is going to be used for its ensuring capital adequacy norms as per RBI regulations, as well as ensuring that the tier 1 capital gets a good boost. You have PNB, MetLife and Bajaj Alliance as the selling shareholders in its 61 lakh offer for sale. And then moving on to Protein e-government technologies, this is an interesting one where you have a IT solutions e-governance company listing on the bourses. The bids open for today, and it's set to raise about 490 crores by offering 62 lakh shares through an offer for sale, and the price band is fixed at 752 to 792 a piece. The company has already raised about 143 crores from its anchor investors. And the company, which operates in e-governance space, has participated in about 19 projects. Some interesting ones like, PAN adoption, digital infrastructure for tax accounting and collection. And so it'll be an interesting one how the response is
That
going to be for
last
this.
one, in fact, the sellers I think are also quite interesting, right? So you have the likes of HDFC Bank, you have NSE that is also selling, a few other big ticket investors selling stake through that OFS.
Absolutely, a lot of big ticket investors who are going to be participating in the OFS, and let's see if it captures the same interest as other listings have recently.
Absolutely. All right, and that brings us to the end. Thanks, Himash. That brings us to the end of this edition of Trade Talk. But I don't have to tell you, there's going to be a lot of action in trade today to watch out for, and you'll find all of that coverage right here on BQ Prime. So don't go anywhere. Do stay tuned.